Alrighty, what is up, guys? Welcome back to Easy Forex Funds. And today I'm going to be showing you guys an easy way to increase your win rate with this simple ICT Mentorship 2022 model and my way of breaking it down. So we're going to look at what to look for when entering the market. So we look for a liquidity sweep, displacement, break of a high / intermediate term high, or a break of a low / intermediate term low. And then we look for an FEG, and then we enter on the fair value gap. If there's multiple FEGs, we enter on the nearest one, and we have our stop loss below the swing / range low. And we are looking for 2 to 3 R targets minimum, and we will only trade in proper ICT kill zones. So we're going to be going over a little bit of price action on GBP USD on Friday, December 30th. We're going to be going over the start of New York session, and I already have everything denoted on here, and I will be showing you guys. You can use this strategy solely on the 1 minute time frame if you prefer to do so, and you can also add 15-minute time frame as an extra confluence. But it is not necessary. You can just use the 1 minute time frame. So if we look here, we have New York open. Price comes down, sweeps the liquidity of this low, goes higher, displaces higher, breaks this high, so we have a market shift, we have a liquidity sweep, we have a displacement, and what do we see? Fair value gaps. So we would enter on the nearest fair value gap, we would target what? 2 to 3 R. For this strategy, I would recommend targeting 2R and having it as a fixed RR because it gets hit very, very, very often versus 3R. You will have a higher win rate if you have a fixed RR of 1 to 2. So now we're going to look at the next example. We can see here we have a low, we have a displacement, we have a fair value gap. You could enter on this, but in my opinion, there's no super clear break of a high. There is this little high right here, so you could enter on this. But for me personally, I wouldn't take this. So now we'll take a look at another example. We have a liquidity sweep, comes down, fails to break this high, and then displaces down and breaks this low. So once again, we have all our steps, and we have a fair value gap. But what happened? Price kept running and never came back to mitigate this. So no trade. What can we see here again? Price comes up. It comes into this fair value gap. Breaks this low, displaces. But what do we see? There's a tiny fair value gap up here. Price never reaches it. Looks like a tiny one in here. Nothing too clean that I would like to enter on, but we also have this fair value gap right here. So with our rules, we would enter on the nearest one, so you could enter right here. And then I also have this breaker block denoted, but that is not part of this strategy. So you could take this trade right here. You would enter here, but your stop loss would have to be somewhere up here. And again, what do we see? Price comes down, breaks this low, displaces, fair value gaps, enter on them, price goes lower. Now we see price switches bullish again, breaks a high, creates fair value gaps. This is a displacement, enter on the fair value gaps, target higher. Again here, break it this high, displacement candles, fair value gap, enter, goes higher. Break of a high, displacement, fair value gap, no entry because it kept just running from price. We see here again, break of a high, displacement, fair value gap, didn't give an entry here. What do we see again? We have a break of this high, we have displacement, and then we have these fair value gaps, so we can enter here. Here, we see price displaces, takes this high, and then comes down and forms a fair value gap, and it actually plays off this one. But this wouldn't be the entry for this entry model. We would have to wait for a shift. What do we get? You can consider this a shift here. And you can also consider this a shift as well. Price displaces, comes back to a fair value gap, and then goes lower. And then once again, takes liquidity, displaces, breaks lows, fair value gap, goes lower. And then that is all the price action for the New York kill zone for Friday. But as you guys can see, this model is very easy. You don't need the higher time frame. You can use this during the proper kill zone when there's volatility, and the algorithm will play out like it always does. So one thing that I don't know if I mentioned earlier, you don't need all the steps, but you need a majority of the steps. What you do need, let me go back to them. You 100% need a displacement, 100% need a break of a high or a low, 100% need to enter on a FEG and set your SO below the swing range low, and you 100% need to look for 2 to 3 R targets. The only thing you don't always need is a liquidity sweep, but you need at least these three, at least 3 out of the 4 of these confluences. Anyway, guys, hopefully I explained this well for you. Hopefully this helps you out. If you have any questions, make sure to comment below, and make sure to join the Discord. The link will be below in the description. Appreciate you guys for your time. Good luck trading. Peace out.